Hi guys, welcome to What Stock, where I tell you what stock I'm buying next and why. Rush asks, can you look into graphene? I heard it was the next big thing for batteries. Thanks, Rush. Well, Rush, I did a quick Google search and I'm going to tell you the best company to buy to get exposure to the batteries market. I'll do a quick run through of the market opportunity, who the major players are, and who I'm investing in and why. If you stick around until the end, I'll let you know how the What Stock portfolio is doing and where I plan on making most of my money. Before we kick things off though, make sure you hit subscribe and ding that bell so you never miss a What Stock pick. The batteries market is expected to grow at a rate of 12% each year for the next 5 years. That's 4 times the conservative rate of inflation, which makes this a great place to park your cash if you can find a winning company to invest in. The vast majority of that growth is expected to take place in the automotive sector, as consumers move to adopting more EV vehicles and hybrid vehicles. But there are lots of market adjacencies that are prime for growth, like consumer electronics and renewables energy. Look, here's the deal guys, right? If you're not directly exposed to the batteries market, or you don't have some kind of exposure in the form of a mutual fund or an ETF, you are missing a trick and you need to shake that portfolio up because you're lacking. I looked at a lot of different companies to see who the major innovators and beneficiaries of the batteries market were. From that list, I shortlisted the 12 that I liked the most because I understood the technology, they had exciting and realistic plans for growth, and their product offering was super sticky. If one of their customers buys it today, they're highly unlikely to replace it in the next 3 to 5 years. Sticky. Raspberry jam sticky. These are the companies I shortlisted as being potential investment opportunities. And before you guys start telling me which companies I should have included in the list, Pedro, just remember investing 101. Buy what you know. If it didn't make the shortlist, I personally didn't know enough about the company to be confident enough to make an investing decision. If you do, great. As you can see, we've got some pure play batteries manufacturers like Tesla and some OEM manufacturers like Albemarle. In any case, you could probably invest in any of these companies and there's a reasonably strong chance you'll see your money grow over the next 3 to 5 years. But as I'm the lone ranger of passive investing and only buy one company at a time, put your phone on airplane mode, cancel every meeting you've got for the next 5 minutes and strap yourself in for my What Stock Pick of the Week. Tesla are an American electric vehicle and clean energy company based in Palo Alto. They employ just shy of 50,000 people, operating in 34 countries, running 6 major subsidiaries that look after their 4 main businesses: automotive sales, leasing, energy generation and storage, and services. These guys are gung-ho about making the world a better place to live by reducing your carbon footprint. And they do this, Mr. Consumer, by giving you a choice of reasonably priced sedans to choose from, or soon to be reasonably priced. Actually, it's pretty expensive for the average consumer at the moment, but they're working on it. As well as retrofitting your gaff with cool, customizable, and cost-effective solar panels through their subsidiary, Solar City. They're a cool company led by serial entrepreneur and fellow kid Elon Musk. But enough about how super cool Elon Musk is. Let's drill into those numbers. In the past 5 years, Tesla's share price has shot up by, on average, 59% a year. Demand for this stock is seriously ramping up. In the past 3 years alone, the average has gone up to 88% a year. That's mental. And what makes it even better is its price to earnings to growth ratio is still 0.74. which could indicate that it's actually underpriced. And it was the lowest peg of every company I screened. In the past 5 years, they've increased their top line revenue by about 50% every single year. And their earnings have increased at a rate of over 80% a year in the same time frame. This has been achieved primarily through their EV business. On its own, these statistics would be insanely impressive and enough for me to almost make an investment. But projected growth of 86% for year 1 and 329% on average over the next 5 years make this an investment opportunity I cannot ignore anymore. Normally, I would have invested in Tesla a long time ago, but I'm an old-fashioned kind of investor and I like to see positive net cash flow before I put my money anywhere, the thing we care most about as investors. Last year, Tesla saw positive free cash flow for the first time in the company's history, which put Tesla firmly on my radar. And with average growth of 18% over the past 5 years and sustainable growth since it's reached net positivity, I can't ignore it anymore. Got to invest. What's even more impressive is the fact that they've grown their book value, the second thing we care most about as investors, by almost 60% each year for the past 5 years. Tesla are absolutely smashing it. They've grown their top line, bottom line, surplus, and net equity at rates which blow my minimum threshold out the water. Now, I've got a healthy amount of exposure to Tesla in some funds that I own, but I think based on these numbers and their growth expectations and everything else about the company, it's time to roll up my sleeves, pull the trigger, and get into bed with Elon Musk, or I will literally regret it for the rest of my life. So let's take a quick look at the technicals. Now, before we drill into the price, it's important that you understand my buying strategy because it could be different to your buying strategy. By default, I'm a long holder. I like to buy a company, forget about it, and gradually watch my wealth grow. I've achieved double-digit growth by following this strategy, so I will continue to follow this strategy because I know it works. The stock price could literally go up, down, left or right at that time, and it wouldn't faze me at all because I can't control short-term market volatility and I certainly can't time the market. If you're someone who is fazed by short-term market volatility or trying to time the market, you can't, or even looking to make a quick buck by shorting or holding a relatively small position, you'll have to figure out an entry position on your own because our strategies do not line up. At the time of this recording, Tesla is trading at $420.63 with a trailing PE of 810.46 and a forward PE of 128.63. In short, guys, this is not a cheap stock. But if you want to own a Ferrari, then you need to pay Ferrari prices or Tesla prices. Exponential long-term growth is certainly factored into the price of this stock. But with shelving orders in place, consumer spending down, Tesla, bizarrely, is still smashing it. The number of vehicles shipped in Q3 2020 is up 143% on Q3 2019. Mental. In my opinion, now is always the right time to buy Tesla, irrespective of what the stock price is doing. Just so happens that I think is pretty bloody reasonable right now. But let's look at what the insiders are doing, or more specifically, Elon, to see how he thinks it's priced. Well, Elon's been on a non-stop purchasing spree of Tesla since mid-2018, according to Edgar, our friends over at SEC. So the poster boy of the EV movement certainly can't get enough of his own stock at this price point, which is a really good sign for me. I mean, here's the deal, guys. They're an awesome company, they have an awesome future, they're moving into an awesome and rapidly growing market, they're disrupting the supply chain by building out and developing their own lithium-ion batteries. It's the company of the future. So for me, at these prices, it's a massive buy. Now I'm going to give you a real quick glimpse of how the What Stock portfolio is doing right now. Everything here is a stock that's been featured in the channel, followed by the price when it was featured, followed by today's price, and the gains that your portfolio would have made should you have bought them and continue to hold them. All in all, this portfolio is doing very well, considering I started the channel a few months ago. There's a bit of a yellow flag with Cena after they missed their earnings projections, but I love the company. I think it has a very strong future, and because I intend to hold for around 3 to 5 years, that little dip is not going to faze me at all. I actually bought a lot more when they took a nosedive. Very happy with Solar Edge. I remember being really excited when I opened the position. I've made a lot of gains there. I'm thinking about exiting it at the moment to free up some capital to look for other investment opportunities. If I do that, I'll let you guys know. To summarize, if you put an equal amount of money into every one of these stock picks, you would have averaged double-digit growth in the space of 2 to 3 months, which is really nice to see. Guys, thank you so much for taking the time out of your day to watch my video. As always, I appreciate all questions, comments, and feedback that you may have. Just let me know and I'll get back to you. Equally, if there's an industry you'd like me to look into, please just put it on my radar because I'm always interested in new and exciting investment opportunities. Happy investing.